Welcome to the second series of this investing page, whatever the fuck you want to call it. We're basically going to be doing a whole bunch of different short videos, kind of keeping the pace a little bit faster. Expect something like 4 minutes, 3 minutes each video, just talking about different topics and different parts of technical analysis, because that's what we're going to be focusing on this series. Like I mentioned before, there's different types of analysis. There's fundamental analysis, basically something good buy, bad buy at this time. Are you with their long-term vision like Facebook is, like with the metaverse? That's basically what they're going towards. Do you still believe in that, or do you believe in the old Facebook? So if you believe in the old Facebook, you probably would no longer invest in Facebook. There's stuff like technical analysis, like again what we'll be focusing on. Basically you're making future predictions based off of past price movement. So you're looking at the charts in order to make decisions whether you want to buy something or get into something. There's mental analysis, so whether you're seeing that a lot of people are fearful, you're seeing if a lot of people are greedy, you're seeing what people are doing basically and trying to analyze it and make a decision based off of that. There's even things like astrological analysis, which sounds crazy or even dumb if you don't believe in astrological signs. Honestly, I'm a Pisces, so I hate astrology. You already know why. But it's actually pretty crazy about how moon phases line up with how the SPY was. Basically, whenever it wasn't an uptrend, you know, whenever I think it was when it was a new moon, we'd go down. When it was a full moon, that was going to be like usually lines up with the peak of that and during that time, which is pretty damn crazy. But again, I'll mainly focus on technical analysis, but there's also other things that sometimes I dip my toes in. Longer the time frame, the more information, the more valid the technical analysis. So if you're looking at the 5 minute or 30 seconds, you know, you're going to get a very, very different picture or story versus like the daily or the weekly time frame. You know, the bigger time frame gives you the best type of technical analysis, just because it's longer time frame, meaning the moves are going to be bigger, more valid, and also there's more information to go based off of. You're not just looking at, like, you know, what happened in the last 15 minutes. And no matter the style of trader you are, you're going to work your way down. So you're going to be looking at the bigger time frames and from there work your way down. So scalpers, you're usually looking for like entries on the 1 minute, 3 minute, 5 minutes, sometimes even 15 minutes. The day traders, 5 minute, 15, 1 hour, 4 hour. Swing traders, 1 hour, 4 hour daily. Leap and long-term traders usually look at the 4 hour daily, weekly, sometimes even monthly for setups. But again, no matter what type of trader you are, you're going to look at the longer time frames. Maybe not the weekly if you're a scalper, but the daily. From there, work your way down through the time frames until you reach your level of whatever type of trader or investor you are. This isn't law, but it's basically somewhere to start, and from there you can kind of tweak and basically adjust it to your personal style. Also keep in mind, bearish means negative sentiment. So if you're bearish on the SPY, you're expecting it to go down over time, or whatever time period you're talking about. If you're bullish, you have positive sentiment. You're expecting it to go up. And that's basically it for the intro. The rest of it, we're going to be looking at different charts, candlesticks, a whole bunch of other different type of shit when it comes to technical analysis.